Several opening trends are developing in the Raleigh housing market. On today's video, I'll tell you what's going on and what you need to know to make the most of it. Hey, I'm Wofford, real estate broker with Berkshire Hathaway. So what's occurring in the housing market right now? Well, clearly there's several new trends that are beginning to form, which is causing the market to shift. Buyers that once had seconds to make a decision now have minutes or hours, which means homes that were selling just hours after listing are now selling in a few days or weeks after listing. So what's that mean for the housing market today? Well, the best way to describe it is the housing market and all the players involved are adjusting to the change in interest rates. So with less buyer competition, buyers can be a lot more choosy than they were just a few months ago. Some of the homes that would have sold in hours or days are now sitting for weeks or months as the demand for mortgages decreases and fewer buyers are left in the market. So I want to point out a few things. First, the Raleigh housing inventory is still at record low levels. So as rates rise, I don't expect the resale market to speed up, as the majority of homeowners have built up a lot of equity in their homes and they already have mortgages with low interest rates. So I think the majority of buyers will be people that are moving into the area for jobs, cash buyers, or buyers or sellers that have a compelling reason to move right now. And I think the rest will wait until we have a better idea of what rates are going to do. Second, on the right side, companies like Zillow and Opendoor that have capitalized and built businesses around low rates are having to scale back or exit the market. Because as rates rise, investor and buyer demand isn't there for home buying based on algorithms and zestimates. Real people are going inside the homes, and the details of the condition matters now that the mortgage market is at a more normal level. Third, so the market's feeding frenzy for homes is waning. The companies that are planning to enter the market and capitalize on the market mayhem that we've just witnessed by offering new buyer platforms, well, they may have to rethink their plans. Fourth, for the retail home buyers, you might need to scale back on your purchase price to adequately reflect the increase in mortgage rates. But remember, as fast as rates rise, they can fall once inflation's under control. But if your rent's going to be as much as your mortgage, well, you might as well be an owner. Fifth, for sellers, homes need to be priced appropriately and must check a lot of the must-have boxes for the typical buyer to make an offer quickly, or you're going to risk running up days on market, which a lot of buyers and realtors really watch like a hawk. And days on market can have a negative impact on the sales price and offer terms you receive. So we're getting back to a more normal pre-pandemic level, and that means days on market matters. Price, conditions, square footage, and location really need to make sense for a home to move quickly with multiple offers that drive the price up. And I want to mention, there's been a recent rule change in how our multiple listing service, otherwise known as the MLS, counts days on market. When the pandemic hit and COVID was going crazy, our local MLS relaxed the rules for homes in the coming soon status. And that status is basically where you can list your home for sale and market it online, but no agents can bring their clients into your home or schedule a showing on the home until the active date. Once the active date arrives, the home automatically switches to active status, and buyers and their agents can now tour the home if it's still available, check it out, and do their due diligence. So in the past 2 years, the days on market didn't start accruing until you hit active status, whereas now those days on market will start accruing from the minute the agent enters the home in either active or coming soon status. So there's really no benefit to using the coming soon status anymore, and doing so will likely do more damage than good. So just to reiterate, if an agent lists a home and selected the coming soon status a week ago, the home now has 7 days on market that show up on the MLS and therefore on Zillow, Realtor.com, and all the other sites. So buyers and agents are skeptical of homes that have an above average number of days on market and basically assume the home's overpriced or something's wrong with the house that can lead to fewer showings and offers, which greatly increases the likelihood the home won't generate multiple offers, which means the offer terms and price are probably going to be weak. And also suggests when the buyer completes their inspection, they'll probably be in a much better position to negotiate repairs, and the seller might be forced to make a lot of the repairs or make a financial concession at closing to get the deal closed. So be careful with days on market. That's all I'm saying. So I think the biggest trends to watch for now will be the inflation numbers, because if the Fed can get inflation under control, they're likely to stop raising rates, and mortgage rates could fall and stimulate the housing demand. So are these shifts and trends a good thing for the Raleigh market? Well, I think it brings us much closer to a balanced market and takes us back to pre-pandemic levels. So we still got low inventory, but it's a much calmer market as opposed to a market where buyers were just buying sight unseen and putting down huge amounts of due diligence money and just saying a prayer that there was really nothing major wrong with the home. So there's just less buyer competition now and a little more leverage for the buyer versus the seller. So while it will cost you more to finance a home, it's going to be easier for home buyers to buy a house, and homes that are sitting on the market for a little while that need repairs, well, they're not going to move as fast. It might be an opportunity if you don't mind doing the work or hiring the carpenters, plumbers, painters, etc. to get that work done. But I will tell you, there's still plenty of homes in a highly desirable location that are priced right. They're going under contract quickly with multiple offers with aggressive buyers, and they're generating lots of showings. But by and large, the homes in disrepair, those are getting picked over and passed over, and might be a good opportunity for you as a buyer to get out there and buy one. And for sellers, this means you really shouldn't expect that you're going to get an offer that's substantially over list price with really strong terms if there's a lot of work to be done. Those days are over unless the location is amazing. But price matters much more now. So what happens next? Well, honestly, I don't know if this is going to be a short-term trend or a long-term trend with interest rates. I do know that from a historical perspective, rates are still compelling, and with schools being out and families going on vacation, I think we're just going to have to wait until the fall to see if buyer demand returns to the Raleigh market. But I think the massive year-over-year increases in home prices will likely slow to a much more normal level, but don't think we'll give back much of the gains that we've recently gotten. So if you're looking to buy a home right now might be a good time where you can get the home you want because there are slightly more homes available for sale with much less buyer competition. And in the long run, home prices should continue to rise. And if the Raleigh market continues to climb in price, it's possible that we could end up like some of the larger cities out there where half the population can't afford to buy a house and ends up being lifetime renters. And that's precisely what's happened in a lot of the larger cities, is investors have bought up all of the inventory, making it difficult for people to find a home, and in doing so, drove prices up higher and higher, which meant people had little choice but to rent. Currently, investors own about 42% of the properties in Raleigh. So what I'm saying is, if you have the means to buy a home, right now might be a really good time to do so since buyer competition is much lower. And as always, please reach out if you have any questions or would like some help finding a home, and I'll see you on the next one.